Lastly, the company adopts a divisional organizational structure dividing departments into businesses such as games, data centers, automobiles, and professional visualization. Each division focuses on its field and collaborates closely across departments in research and development, sales, marketing, and other aspects to quickly respond to market changes and promote technological innovation and product iteration. Next, we turn to industry prospect analysis. First, we'll start with the GPU market. The global GPU market continues to expand, reaching $44 billion in 2024 and projected to exceed $100 billion by 2030, a compound annual growth rate of 15%. In the gaming sector, with the widespread adoption of 4K and 8K resolutions and the application of technologies like ray tracing and DLSS, GPU performance requirements continue to rise. In the data center sector, the exponential growth in computing power required for large-scale AI model training and inference has become a core driver of GPU market growth. Next, in the AI chip market, NVIDIA takes the lead amid fierce competition. The AI chip market is experiencing rapid growth, reaching $40 billion in 2024 and projected to exceed $200 billion by 2030, a compound annual growth rate of 25%. NVIDIA, leveraging its CUDA ecosystem, leading chip architecture, and powerful computing power, holds a 65% share of data center AI chip market, surpassing competitors such as AMD and Intel. Next is the autonomous driving market. The autonomous driving market is projected to reach $1.36 trillion by 2030, with a compound annual growth rate of 32.3% from 2023 to 2030. NVIDIA, through its Drive platform, provides automakers with a full-stack autonomous driving solution from perception to decision-making. Partnering with numerous automakers, including Tesla and NIO, NVIDIA holds a significant position in autonomous driving chip market. In our next section is NVIDIA's competitive landscape and moat analysis. Firstly is its market dominance in CUDA moat. NVIDIA holds a commanding position in the AI chip market. Multiple estimates place its market share of data center GPUs used for AI training and inference at over 80%, with some estimates reaching as high as 90%. Its dominance is even more pronounced in the traditional discrete graphics card market, reaching 92% by the first quarter of 2025. NVIDIA's deepest moat isn't simply its high-performance hardware, but the vast mature software and developer system built around the CUDA platform. After nearly 2 decades of development, CUDA has become the de facto standard for general-purpose GPU computing. The vast majority of AI frameworks, libraries, and applications are developed and optimized based on CUDA. This makes it extremely costly for developers to migrate to other hardware platforms, fostering stronger user attachment and network effects, providing a continuous boost to NVIDIA's hardware sales. Next is the analysis of NVIDIA's major competitors. First is AMD. AMD, as NVIDIA's primary competitor in the GPU space, its MI300 series AI accelerators boosts highly competitive hardware specifications, particularly in terms of memory, bandwidth, and capacity. Performance tests show that the M1300X's throughput can surpass NVIDIA's H100 when processing specific inference tasks, such as large batches of data. AMD is also actively developing its open-source software platform, ROCm, in an effort to lower the migration barrier for developers by providing CUDA code-compatible tools. But despite this, ROCm's ecosystem maturity lags significantly behind CUDA. Next is Intel. Intel, once a dominant chip maker, is also pursuing breakthroughs in AI. Its Gaudi series of AI accelerators, such as Gaudi 3, demonstrates price-performance advantages in specific AI workloads. However, its market share is currently very limited, even reaching 0% in the discrete graphics card market, making it unlikely to pose a substantial threat to NVIDIA in the short term. Cloud service providers such as Google and Amazon are designing their own specialized AI chips, such as Google's TPU and Amazon's Trainium. These in-house chips are primarily used to optimize their internal workloads and reduce their reliance on NVIDIA. In-house chips offer significant cost advantages. According to analysis, Google's unit cost for AI computing power may be only 20% of that of purchasing high-end NVIDIA's GPUs. However, these chips are less versatile and primarily serve their own platforms. They are unlikely to enter the broader commercial market and directly compete with NVIDIA in the short term. Lastly is the Chinese competitors. Chinese companies, represented by Huawei, are accelerating the development of their own AI chips. While U.S. export controls have limited NVIDIA's sales of its most advanced chips to China, they have also stimulated the development of China's domestic chip industry. NVIDIA CEO Jensen Huang has called Huawei one of his most formidable competitors, and its long-term potential cannot be ignored. Our next section will take a look at the risks and challenges that could impose on NVIDIA. Firstly is overly high market expectations. NVIDIA's current share price already incorporates expectations of continued high growth for several years. Any signs of slowing growth, whether due to market saturation, increased competition, or macroeconomic factors, could lead to a significant correction in the stock price. Next is the geopolitical risk. The technological competition between China and the United States poses a significant risk to NVIDIA. U.S. government's export control policies toward China have directly impacted its sales in China. For example, the company reported that export restrictions on its H20 chip resulted in an approximately $8 billion loss in its quarterly sales guidance. Furthermore, the Chinese government may encourage domestic companies to reduce their purchase of NVIDIA chips for security reasons, posing a long-term risk. Next is identify competition. While NVIDIA's current position is solid, the high profits in the AI chip market are attracting more and more entrants. Competitive pressure from AMD, Intel, cloud service providers, and startups will continue to increase, potentially eroding NVIDIA's market share and profit margins in the future. Lastly is technological upgrade risk. The semiconductor industry undergoes rapid technological advancements. NVIDIA needs to continuously invest heavily in research and development to maintain its technological leadership, and any misjudgment of its technological path could have serious consequences. Despite facing challenges, in our next section, we'll take a look at investment outlook and analyst ratings. Despite facing challenges, NVIDIA's long-term growth prospects remain broad. The global generative AI market is expected to expand at a compound annual growth rate of nearly 40%, reaching nearly $1 trillion by 2032. This will provide continued strong momentum for NVIDIA's data centers business. Furthermore, the company's investment in areas such as autonomous driving, robotics, and the Omniverse are expected to bear fruit in the coming years, unlocking new growth opportunities. Looking at NVIDIA's current stock price since breaking through the $153 mark in June, I believe that it is relatively high but can maintain a steady upward trend. This bull market is not over yet, and the investors who have already bought in should continue to hold on to their shares for further gains. Wall Street analysts are generally optimistic about NVIDIA's future performance. According to a survey of 42 analysts, the average 12-month target price is $194.31, with the highest target price reaching $250. Among mainstream ratings, approximately 89% of analysts have a buy rating. For example, Morgan Stanley analysts maintain their overweight rating with a target price of $206. For over-the-counter investors, it is recommended to adopt the strategy of building a position first and then covering the position during a pullback. for example, in the range of $166 to $170 to buy and hold. In conclusion, NVIDIA is undoubtedly the most significant beneficiary and driver of the current AI era. Leveraging its robust hardware and software ecosystem, the company has established a near monopoly in AI computing and achieved exceptional financial growth. Its continued dominance in the data center market and its significant potential in emerging markets such as automotive and robotics provide strong support for its long-term growth. However, investors must remain aware of the lofty expectations embedded in its stock price. Geopolitical uncertainty and increasing fierce market competition are key risks to the company's future growth. For long-term investors, NVIDIA remains an attractive core asset, but its growth rate, profit margin fluctuations, and evolving competitive landscape warrant close monitoring. At its current relatively high level, any market fluctuations could trigger significant swings in market sentiment. Investors should carefully assess the risks and consider a phased approach to building a position.